So this Arjun, he studies in the university, same age of you guys. He started a business called Hunger Heroes that we all know. Yeah, so his friends are very excited to visit the shops. He's having multiple customers at multiple times, and he's flooded with all the food items, and his taste is fantastic. So people are loving his burgers, his hot dogs very much. But end of the day, Arjun is not able to identify whether he is making money or not, because making money is not easy, and sustaining the money is also not that easy. So Arjun want to understand that is making profit or loss, because any business, its main objective is to make a profit. So he goes to his dad and asks why and how and why I'm making this problem. And he was unsure that either is he running his business is loss or not. So since he doesn't know how to make accounts, because he never learned accounts end of the day, so his dad suggested him to join Thinking Suite of Commerce, where they're gonna teach each and every concept through practical application, where you might feel that this is something I see daily. They solve your personal doubts. It could be from silly to high level doubts. They provide you all the keynotes with good amount of clarity, when the studio will make you shape in a better person with a better knowledge. After joining to us, we started to teach him what is accounts. So think of accounting as like your life memories. So let's say you are having a marriage or having any event in your family. The most important thing is you call a cameraman. Why? Because when you see after 10 years or 15 years, you identify as the memories, and same accounting is also a memory for the business. So accounting refers a process of identification, measuring, recording, and communicating the required information. So what is identifying, measuring, recording, communicating? So let's say, think it from an aspect where you click a photo, you identify it's someone's marriage is happening. You click number of photo, that's a measuring part. Then you record it in your pen drive or make an album of it. And communicating is you're gonna show to your friends, your family, your relatives. So same happens in accounting. So when a transaction happens, let's say if a business sells 100 rupees of goods, the first thing is that a shopkeeper should know that he had sold a good of 100 rupees. Then measuring the quantity and the value of the product. He sold 10 quantity worth of 100 rupees. Then recording into the books, that naming the transaction, when the date of transaction, and whom did he sell the goods. Once the series of transaction is done, then he will communicate to the required person. The communication can be happen to the self-entrepreneur also. He might want to understand how the business is happening. To the banks when they approach for the loan. To investors when they want to invest in the business. A government to understand whether they're doing the business legally or not, or are you paying taxes or not. So accounting is the memories of the transactions which a business does. Now, why accounting is needed? So Arjun was like, I know these things, but why should I do accounts? So let's say a business makes 100 to 200 transactions a day. To record this 100 and 200 transactions a day, it is very difficult task for everyone. and every person can't remember how much they sold, how much they paid. So whenever a transaction happens, you have to record in the books of accounts. That's called identification of financial transactions. Then recording it. So once you put in the books of account that I made a sale of 100 rupees, then you have to put journal entry, then the ledger system. So now you might feel what is journal entry, ledger. You will be coming in upcoming sessions, but think it as if you're putting all your photos into the albums or the pen drive. So putting all your books of transaction into different parts. So this is where you're going to identify this transaction happened this day for this particular person. So this is how it is done. Summarization. So once a full financial year ends, you will have dozens of transactions. You won't be able to count those transactions. You have to summarize into smallest form to understand what's the position of your business. So for that, we make various statements called trial balance statement, profit and loss statement, and balance sheet. Now you might be asking, what is these things? Trial balance is a statement where you're going to see all your transaction has a two aspects, which is matching or not. Profit and loss is going to show how much profit or the loss you made every year, and balance sheet is going to show how much assets you have and how much liabilities you have. Then analysis and the interpretation is very interesting aspect, where if you see, banks will understand how much potential your business has to give loan, because loan depends upon the business and the risk you take. The higher the risk, higher the loan interest rate. For investors, is a business profitable? Is a business scalable? They have to study these things. Your employees will also ask for the financial statements, because they have to understand, is your company running in a good position or not. Then what are the objectives? What is the outcome of doing this? Maintenance of record of business transaction. So you will find all the transaction what you have done in a year. Then it will show how much profit you have made in a year, because a business main purpose is to make profit and give returns to the investors and the stakeholders. So this accounts or making an account will make you understand where you're making so much expense, where your income can be bettered, or your business is making huge amount of loss, why. This helps us to understand why it's required to make a P&L statement. Financial position. It's very interesting, because if you have more liabilities than your assets, that means you owe more. If you want to you owe more, then we have to pay more number of interest, which is going to impact your profit and loss statement. So every time a business has higher amount of liabilities than the asset, this is going to affect the financial position. What do you mean by financial position? Where it stands in a business point of view. If let's say any uncertainties happen, let's say COVID-19, this business will be able to handle this kind of pressure. They have the quality of assets. Are their liabilities are very less? That's the financial position. It shows how much strength they have in the business. Information to use. Again, these accounts are further classified into different statements. Let's say they make a P&L graph. Let's say they see 10 years how much profit you have been making, at what percentage you have been growing. This is going to show that people are willing to buy or be interested in a business or not. Now we come to the end of part 1, where Arjun has understood that running a business is not an easy. Accounting the business is very difficult. Why? Because accounting has lots of complications. There is no formula to do books of accounts. You have to understand various aspects also. So in next session or next part, we'll see the key difference that what is a bookkeeping, what is an accounts, and what is an accountancy. And further we'll see what the key basic terms for the accounts which you see every day but you never understand why we use it. So this is about the part, and hope you liked it. Hope you will share to your friends and support us with the great efforts. Thank you. Have a good day.